Good afternoon and welcome to another session of the WealthTech Talks from the Wealth Mosaic. For those of you who haven't listened in before and don't know me, my name is Stephen Wall, one of the two co-founders of the Wealth Mosaic. I typically host these sessions. Today I'm joined by Nigel Armstrong from Blue Prism and by Ian Woodhouse from Accenture, and I will allow the two gentlemen to introduce themselves shortly. The topic is evolving digitalisation and automation in the UK wealth management sector. So we'll be, with Ian and Nigel, we'll be talking about this topic for the next 50 or so minutes. For those listening in, the session is live now, but being recorded, so you can listen to it again later, either on Brightalk or the Wealth Mosaic. We will share it with you, or you can access that yourselves. Feel free to ask questions if you have them. We will take them at the end. So, why are we doing this topic? So we were working for Blue Prism earlier this year, doing some research in the UK wealth management sector on business efficiency and automation. And we produced a white paper based on 15 qualitative interviews with UK-based wealth managers on things like what their business goals are, business efficiency, automation, growth and technology. So that's the backdrop to the topic. And for the session we're going to run through with you today. So quickly, Nigel, can I ask you to introduce yourself, and then after that, Ian, please?
Yeah, I'm Nigel Armstrong. I look after the wealth and asset management solutions at Blue Prism. Very quickly, for those who don't know Blue Prism, it's a global organisation, 20 years old, been dealing with automation during that time, got sort of 2,500 clients globally across all different manner of sectors: financial services, manufacturing, public sector and insurance, healthcare, telecommunications, etc., etc.
Thank you, Nigel. And Ian?
So, welcome. I'm Ian Woodhouse. I'm the lead wealth management transformation and thought leader for Europe at Accenture. I have a client-facing role. So I tend to assist executives in our global, regional and local wealth management and private banking clients, and we help them to keep ahead of the industry changes. I work alongside my colleagues and also with our software partners to explore, design and deliver the post-COVID business and technology models.
Fantastic. Thank you, Ian. Thank you both. So backdrop again. So as I mentioned, we did qualitative interviews with 15 executives from UK wealth management firms, mid-sized firms, sort of traditional players, a mixture of entities, and really interesting insights into what they consider in terms of their business goals and how they're driving efficiency, what they're focusing on, what they're challenged by, how they consider automation. So Nigel, I think as we get into this, automation is a huge topic, a massive opportunity, but it's also quite a broad area. Blue Prism is obviously an expert in this space. Can you give us first of all, just a view on what is automation? What do we mean by that? What do you mean by that word? And what does it therefore mean for wealth managers?
Yeah, okay, Stephen. You're right. It's a very broad term. We see a lot of three-letter acronyms thrown around, but unfortunately it does gear itself around those. So for me, automation is around intelligent process automation at the moment. Now that in itself, is a mystery to a lot of people. But what it incorporates essentially is robotic process automation, machine learning and artificial intelligence, and I'm sure we'll dig deeper into those in a bit later. But in simple terms, RPA, robotic process automation, gives firms access to a pool of digital workers. Now, those digital workers are non-invasive and they mimic essentially human activity. There aren't physical robots running around the office, just to reassure people about that. These digital workers perform repetitive tasks, and they do it very quickly. They don't get tired like we do. They don't forget things, so they don't make mistakes, and they can be deployed across and interact with any system, internal or external, any platform, just as a person would. So they integrate with those front ends just like you and I would, password, login, etc. They don't interfere with any existing system integrations or APIs. In fact, they work very well with those, just as hopefully a lot of us do who are here today. It also enables the digitalisation extraction of data from structured and unstructured documents or IDs, passports, driving licenses, etc. And that data can be classified and verified and transformed and input seamlessly into any, like I say, any system, internal and external, of your choice. Now, machine learning and artificial intelligence take that to another level. They give firms the ability to break out of the inflexibility of the HR model. So what do I mean by that? Well, businesses traditionally, absolutely can't scale up and down their employee resource at the click of a button. And nor can they move individuals from different departments just to fill variations in workloads and that kind of thing. Now, digital workers can do that. They can work across the entirety of the business, and not just the front to back office that we've seen a lot of mention in the research report, but also within different overlooked departments as well: HR, finance, legal, etc., etc. So it removes those traditional silos. It's a bit, an analogy, Stephen, might be in a motorway you drive down different lanes depending on what you're doing, what speed you're doing. A digital worker it removes those lanes. They're able to move across those lanes seamlessly without causing accidents or anything like that, and are able to free an organization to do the same. Very lastly, machine learning and artificial intelligence look at and mine data more effectively. So you're able to provide propensity scoring, for example, that allows the hyper-personalization of products and services. Now, what the firms get out of that? Well, they get quite a lot. They get to embed automation across the entirety of their business, and it typically results in cost savings of between 60 and 75%. And frees, obviously, a company's most valuable resource, its people, to get on and do things that they actually are probably more interested in and add more value. So it's a really key and important area that wealth managers should be focusing on. And those forward-thinking firms that do are going to become the forerunners. So that, anyway, Stephen, in a big nutshell, is what intelligent process automation is about.
Yeah, thank you, Nigel. No, and having discussed this before, it's powerful, it's adaptive, the applications are really broad, so it's an interesting area. However, I think the research showed that the markets, as you might have mentioned at the beginning, has got some learnings about what it is and how to use it. Ian, if we just take it back to sort of where the market is and think about business efficiency, and also now think about automation as Nigel has introduced it, why is this relevant now? Can you talk a little bit about the backdrop of why this is something that wealth management firms should be looking at and learning about?
Yeah, sure, Stephen. So why is the topic of efficiency and automation relevant to wealth? Well, I think the first key thing is we're in this post-COVID environment, and the wealth management models are going through a significant change. They're evolving. So what COVID has done is it's forced wealth managers to start automating because of the need to for the advisors and the clients to work remotely interactive. And also what we've seen is new clients have come to the fore in COVID. Think of the day traders, for example, as just one example. And then I think in line with that, there's been a big issue around resilience of the platforms and how automation can help them deal with scale. And I think we're moving now to the next era of automation, which is it's being more starting to be used more towards a change and innovation in the business models. And this is allowing firms to capture new revenue generating opportunities, and it's allowing them to serve segments where perhaps previously they couldn't make money. Like, for example, the affluent advice can now be delivered more profitably through the use of automation tools, whereas maybe it couldn't be before in the pre-COVID environment.
Fantastic, thank you, Ian. Nigel, coming back to you, you might want to pick up on a couple of Ian's points, but what I wanted to ask you is, what's been the approach? I mean, you've given us a background, this is what it is, and this is where it's going to in terms of RPA and machine learning and artificial intelligence. What's been the approach of firms to automation so far? I mean, what have they done, I suppose, to this point?
Well, it is varied, and I thought, and thanks again for doing the research report, Stephen. The results that came back are fascinating, and different firms, as you'd expect, are dealing with it in different ways. All of them understand that COVID and other pressures that their firms facing require them to do something. And it requires them to digitalize and offer bespoke services, to meet sort of clients' convenience and time savings. Where they start to differ is how they do it. For a lot of firms who don't understand, intelligent process automation, what we often find and what they seem to do is to focus on an individual area to automate, and it could be client reporting. I'll speak to firms and they'll say, well, we've automated that. I'll say, that's fantastic. And what they mean is they've got another system in to solve a very specific problem that they have. And that is where the journey stops for them until they then focus on the front end, where they will find perhaps another module, that system they're already using, or another tool that they'll implement to help them there. So they're doing it in that sort of piecemeal fashion with all the right intentions. The bit I look at the report and I see time and time again is the lack of understanding that if you've got intelligent process automation as a bedrock, as a foundation for your business, then not only can you automate new systems that are coming in, but you can actually maximize the investment on the systems that you've already bought to enable them to work more fluidly and seamlessly, across the organization. How like I say, how they're dealing with it is different, and it's largely different depending on their understanding of the solutions that are out there in the market.
Thank you, Nigel. Ian, similar, basically the same question. So what we saw from the research, as Nigel touched upon, was it's very piecemeal. So there's a problem, they find a solution, they move on to the next problem. There isn't really, let's say, an integrated view of using IPA as a platform or as a service or as the glue or whatever the right word should be. Nigel should correct me on that later. But what's your view on where the industry is in terms of automation? Do you share what Nigel said and what the research said, or would you see it differently?
No, I would agree with the findings of the research. And I think what we're seeing is not all of our clients are equally prepared for this. One of the things that we're seeing is that different firms are at different stages. So firstly, there's a foundational or exploratory stage. And so some people or some firms are in that area where it's about basic automation. I think we see a second area or group of players who are automating mainly for efficiency gains. And then we see a third group that are moving forward, that are a bit more innovative. And what they're doing is leveraging the opportunity to create insights and more predictive opportunities around the client base. And then lastly, we see a few, but not very many, who are sort of what we would call fully intelligent or largely intelligent, and these are the more future-ready firms. So we see those 4 stages, and there are very few in our client base, or what we're seeing, there are very few who are yet intelligent or fully future-ready. So these would be what I think Nigel called the forerunners. So it's those 4 stages we see, and different firms are at different stages.
Yeah. Fantastic, thank you. I mean, I think it gives a really nice structure actually to this. So, Nigel, one of the elements of the research that we focused on through the questions and obviously the analysis and collection of the responses was business goals, and the responses showed that core goals with technology, also rather a core goal is to use technology as an enabler of growth, right? It's also about delivering business efficiency, so delivering growth without adding costs. Is that what you're seeing from the conversations that you're having in the market with potential clients or existing clients?
Yeah, it is. I think it's a double-edged sword. They see reducing time and costs, sometimes at the expense of their people. I.e., if we automate this, then we need to get rid of, a certain amount of people, and that's the wrong way to do things. This is about getting the most out of the existing people you have, who are currently doing very manual jobs that frankly we aren't very good at anyway. I'm no good at going into different systems and copying and pasting information into Excel or vice versa, and it's not enjoyable, and it's not what they want to do. When firms start to see that this is about giving those people effectively an executive assistant that can take care of that mundane, repetitive stuff so that they can do things that people are good at doing, problem solving, making decisions, talking to people. That's really where they need to get to. So it moves on from time and cost savings. The firms that I'm speaking to that are most excited is when they jump to that next step, and when they see that if they've got that bedrock, innovation becomes something entirely possible. And that can be around open banking, it can be around adding mortgage services and this kind of thing. If you've got automation there to bring that information back, it could be around cryptocurrencies and valuing those. Again, it's all possible once you remove the manual activities around it. You can scale up those services without adding any headcount because you're freeing up headcount.
Yep. Fantastic. So really about enabling the organisation and the people. We'll come on, I think, hopefully to the innovation part in a little while, when maybe when we talk about the growth side. Ian, from the research, another element was about removing friction from processes. So there's challenging things like the client journey, client onboarding, the digital client experience. Are these focused points that you see in the market for firms? And do you think automation is something that is supportive of removing friction from the process, whichever process that might be?
Well, I think it depends, because what we're seeing with our clients is they tend to have very different business goals. So I think firstly, it's very dependent on whether executives see the post-COVID inflection point in terms of how the wealth management model should change. And I think it's also their understanding of the value that intelligent automation that can deliver, because it's relatively new as a technology. So we see some of our clients are still in the early stage. So this is about having a right to play. That's about being efficient around compliance and risk management. I think also those early stage ones are getting better at what we would call basic automation in the middle, the back office, and in the support areas. Now we see another group of clients who are much more in the later stages. So they're looking for the business goals to deliver more innovative client experience as the way to win going forward. And these tend to have the higher revenue growth aspirations. And then lastly, we're seeing a few who are much more or considerably leveraging the opportunities from intelligent automation. It's a bit like Nigel said, that they get much more used to it, and then they're using intelligent automations to make themselves kind of more future ready. Now, I would stress, Nigel's point. I mean, it's all about how you use automation in terms of the goals. Now, firstly, you can use it to reduce costs. The second area, though, is you can use it to drive productivity, and this is very much Nigel's point about shifting scarce talent to focus on higher value roles. So, for example, if you take an advisor in wealth management, they typically have a book of clients. What the advanced firms are realizing is they can manage many more. Those advisors can manage actually more clients by removing from them some of the administration time, which is non-value adding. And then last thing, and I think this is most important, in addition to reducing costs and driving staff productivity, you have a tremendous opportunity to improve the client experience. So, by using intelligent automation, you can reduce your reaction time to clients. Sometimes it takes days. Now you can reduce that to a matter of hours for certain key processes by leveraging these the new technology in this area.
Yeah, fantastic. Nigel, thinking of those elements, so you've got cost cutting, you've got productivity, and then you've got effectively innovation and improved client experience. And there are different players in different pots depending on their individual experience. What determines where, I suppose, a firm is in how it's using intelligent process automation, and then how it moves through those stages? So presumably they start with cost cutting in terms of the initial engagement, and they focus on one process or one problem. But obviously you see it much broader than that. So how do they go on that journey from starting through to really maximizing the potential within their organization from this area?
Well, like you say, I think it's people only know what they know, and they don't know what they don't know. And to start with, the conversations I have with very senior people is an educational one. Because no matter what stage they're at, they seem to believe that each department or each function needs a different software solution to make it better. Now that could be for time and cost savings. It could be to maximize revenue. It could be to reduce the cost to serve and their fees. Whatever their end goal is, what they're doing is looking at different solutions, of which there are, let's face it, thousands out there. I wouldn't like to be in their position trying to choose which one to do first, frankly. But where artificial intelligence and machine learning and RPA meet in the wealth management sector is really around product and pricing, client experience, client engagement, productivity, and operational efficiency. So all of those are outcomes of using these technologies, all leading to hyper personalization, and because of that, driving, as Ian said, a much greater client experience. Now, I think once they understand the potential of what it is they can do, once they've got automation as a bedrock, so not enough a system that they have to deal with, but actually a digital workforce that sits above all of their existing systems, enabling all of those existing systems to interact with each other, but more than that, to actually carry out the tasks that are needed as that data moves from department to department. We mentioned onboarding, and I'll speak to firms, they'll say, we've automated onboarding. And I'll say, okay, how does it work? And they'll say, right, well, we've developed a portal, and the clients will go into that, and they'll fill in their information, and that will flow through to our system, of which there are many. It could be Iris, could be whatever. and so it's now automated. So I asked her, okay, so it's in that system. What happens next? Yeah, well, that moves to the KYC and compliance department. Okay, so how does that work? They get notified, and they will then carry out their due diligence. Okay, so how do they do that? Well, they get the information, they key in to Companies House, Interpol, whatever it is that they're using to start to pull back the results. Say, okay, and then what? Well, they'll get the results back and they'll hand it over back to the onboarding team, who'll write to the client, request more information, perhaps, etc., etc. But you can see what I mean. Already you've got these manual handover points where actually what you want is really that information coming in once and being entered into one system and made available to every single system you have, internal or external, platform or not, and having those tasks automated. No data entry. All you want to be doing is looking at exceptions and focusing on client engagement. That's the ideal.
Yep.
And that's entirely possible.
It's like the blood flowing around the body, right? Isn't it? Maybe an analogy. I don't know if that's a suitable analogy, but it joins all of our little working bits up. So just coming back to the structure of the research. So we looked at business efficiency, and there's clearly a good understanding of what that is and what firms want to achieve and how to work towards it. And areas of focus included things like their architecture, their data structure, improvements to things like front-end processes. And firms have made gains in certain areas, particularly I think in sort of middle and back office there's been a focus. So maybe that doesn't come to your point on client onboarding. One of the things that was raised, however, is that some of the investments in technology, the fear is that the effort sort of required to implement and develop and maintain that is actually as much of causes as many problems as they had before they did it. So is that something you see in the market? Does that sort of relate to the point you just made?
It absolutely is. Going back to what you said, where are they in the automation journey? And as Ian said, a lot of people are contemplating it. They know they need to do it. They don't know how to do it. And if they know how to do it, they don't know where to start. And so hence you get this fear factor of, are we going to invest in a technology that doesn't give us the return on investment that we actually want? Now, again, an education piece, there's a team, I think in the article, someone mentioned, so we've brought in a team to look at our current processes and understand where automation could benefit them, etc. Now, here again, that technology that process intelligence and data mining technology is available. You can plug it in and it will start to map out those journeys for you and programmatically. God, the lights just keep flashing on and off. This is the trouble with being in an office, back in an office, isn't it? But it will programmatically feed you back those results, so that you can actually understand down to the month when you'll see a return on investment in terms of hours saved, time saved, etc. So yes, there's that fear, and I think that holds a lot of people back, and they just need some help, consultative help to understand what it is and where the high priorities, low-hanging fruit are.
Ian, low-hanging fruit. So one of the areas that firms focus on back in middle office, that's where they're sort of improving processes. So things like client onboarding. For you, are there other areas of low-hanging fruit where, let's say, you're an early adopter in intelligent process automation and you're not far advanced? Where do you think they can also look to generate efficiencies?
Well, I think there are a number of different opportunities. You can look at the front office areas or the revenue generating side of the business. You can look at the middle and the back office areas. I mean, and you can look at the support areas as mentioned. I think big areas at the moment seem to be around in it's streamlining investment management, which is quite a complex process. It's often disjointed, and there's a massive need for more and more data. Just think about the data requirements to evidence ESG and the latest regulations. So definitely there are certain areas that are more attractive than others, but again, it does vary by firm. I think the thing to pick up is it's not easy. It's not an easy transition. So the challenge is to overcome this fear. What I think that's about is having the right mix of providers, and I think it's the right combination of technologies in the right way. And I mean, what you're effectively doing is also you're changing probably the way you look at this. So, the more successful players tend to look at it from a value perspective. What's the value to the business? It's the sort of things that Nigel was talking about earlier. Is it a productivity gain? Is it innovation gain? Is it faster new product development? So you always, to be successful, you have to have a value case, I think, at the beginning. And then the way that we're seeing people implementing is also changing. It's moving towards more agile, towards minimum viable propositions. So you get a proof of concept in quite quickly. That can be in months rather than years. And what you do once you've got the proof of concept or the minimum viable product, what you or minimum viable process, what you do is you then scale it up. So I think there are ways to overcome this, the fact that it's not an easy transition and the natural fear. And it doesn't really matter where you start. You can start in the front office, you can start in the middle office, you can start in the back office, or you can start in the support areas. But the thing is, you need to do it in a way where the business, the technology, and the software providers are all working together, to make sure that this thing, the initial proof of concept or the initial minimum viable product, delivers that business value, which I talked about earlier.
Yeah, no, fantastic. Thank you, Ian. Nigel, you talked about thousands of vendors in the market, and Ian's talked then about collaboration between vendors and internal teams and different things to make it work. Not always easy, historically, definitely very difficult, but we hear a lot about connectivity and APIs and ecosystems and marketplaces now. In fact, it's kind of one of the reasons why the Wealth Mosaic exists anyway. But what's your, and you've talked about data flows and breakpoints and different things not happening. Automation hits a manual process, goes to automation, hits another manual process. How does Blue Prism sort of help solve that problem or smooth out that problem? What are the sort of things that you do and you offer?
I think it's really, I mean, just being totally Blue Prism agnostic, for a second. The way companies need it to work is for that ecosystem of different systems and vendors and service providers to be working with each other. For them to have a relationship themselves that those companies can benefit from. In the case of Blue Prism, we have a digital exchange where we have sort of 500 or so software providers that are joined into that. So you can even whether it's, we saw about electronic signatures quite a lot, I think, in the paper. So DocuSign, SignDoc, partners of ours. So where you want to use them, you can actually just buy them through the digital exchange and drag and drop that in as part of your process. So the links are already there. You shouldn't be spending a lot of time doing this. Companies need to be making it as easy as possible for people to do this, and it, like Ian said, in a short space of time, with the confidence that it will give them results. And they can get that, like I say, through process mining or simply by picking up the phone to people who've done it before. and, and asking Barclays or Lloyd's, how it worked, how they did it.
Yeah. Okay. Fantastic. Ian, I don't know, did you want to pick up on anything else there, or
no?
One thing I wanted to ask. Sorry, to. It's about legacy technology. Does legacy technology play here?
Yes, I think what's also important is the industry is shifting both in terms of its business model and in terms of the technology model. The technology model is evolving from legacy systems, which were probably implemented in a waterfall type approach, and very long implementations. Maybe 18 months, 24 months if you were lucky. Very high cost, very high risk, and if anything went wrong during those implementations, very difficult to pull them back, or without risk and cost. As I mentioned before, it's moving now to, and as Nigel has said, it's moving now to a different way of implementing IT. So that's working with partners. There are many software providers out there. We at Accenture are very software partner agnostic. We have seen some combinations work, other combinations of providers don't work. So it's very much about adopting a new approach to make this to make this work. Now, I would say, although we are a technology company and although we work a lot with software providers, one of the most important things, it's very important to recognize it's not just technology or software. It's a lot about people. And one of the things that Nigel mentioned is, it's a great opportunity for people because you're taking away from them the low value added mundane tasks and you're freeing them up to work on much higher value. That way you get more enthusiastic people, which comes full circle back to delivering a great client experience. And it's a lot about people. So what I would say is it's finding the right balance between people, the human machine interaction. And I think that's key going forward. This is a lot about changing the culture. It's a lot about changing the way people work. We're involved in a lot of upskilling, reskilling. We're involved in a lot of digital dexterity type assessments to help those firms adjust and get the right balance between the human and the machine interface.
Perfect. So this comes on to actually the next segment, which we covered in the research, automation. So clear desire for automation, but the challenge here is the cultural shift. So there's fear about what it is and what it means. Does it mean people are sacked effectively? Or, as we're talking here, is it more about upskilling? There's also just a leadership understanding of what automation is and how it can be driven through the business. So Nigel, what can you tell us about the sort of cultural element and how you can embed, let's say, a cultural understanding or an acceptance of what automation is and what it means for the business?
Yeah, I think, I speak to firms, and when they realize the capability it offers, it can be scary. Until they have a workshop themselves, and they start to understand how it can benefit them. And as Ian says, people don't want to be doing some of the work that can quite often take up 40% of their time. I mean, 40% of their time, of high value people that you've employed for other skills other than the fact that they can copy and paste information, I hope. And they're relieved. Once they get it, they're actually very relieved and become very excited about how much better a job they can be doing. And they get excited about what it means for their company. They get excited about the new services that the company could launch through those cost savings and how they can get involved in those. It is different value for different companies. For the Met Police, for us, the end value was getting more police on the street. In the NHS, it's about getting more nurses there doing what they do best, which is looking after patients, not filling in, putting data into different systems. So, the NHS, is a big client. But yes, there's an educational piece to be done with them. Once they realise that this isn't a threat to them, they are fully on board. That is not to say that firms, particularly larger firms, I think it would be fair to say, don't take that as an opportunity to say, actually, maybe we don't need that team anymore. I think within wealth management, all the feedback I get is, can we scale the business without adding headcount? And yes, you can. And the only way to do it without constantly adding costs is through utilizing a digital workforce.
Ian, I remember actually doing, I'm not sure whether you were on it, but we did a webinar before about how to balance people and technology, how to get the most of the two together. So bringing in more technology to take away the 40% of inefficient time spent, as Nigel mentioned. How do you make sure you get it right and you don't get it wrong and you don't sort of cause, other risks or problems? Is there a methodology that can be followed?
Well, I wouldn't say it's a methodology. I think it's an approach and mindset. I come back to this, this concept of this proof of concept or minimum viable proposition. I mean, what we're seeing is a lot more firms are adopting this agile approach, and it's agile in terms of the business and the technology. So what you do is you get the business partners, you get the advisors, you get the head of the people involved with regulation and compliance, you get the technology guys, and you get them all working together on how they optimize intelligent automation. And that way, by involving people in joint development, which is a business and technology angle, you're able to get the right balance, because by creating this minimum viable product together with the business and the technology, you're avoiding the old way of doing business where the technology guys would take requirements. It would be quite a long drawn out process. They would then go back to the business and they would deliver something. The business would turn on the system and say, well, what the hell is that? So I think you what you're seeing is a very different approach to technology innovation, and it's business and technology innovation together, and it's done in a way where you can test and learn, and once you have your minimum viable approach or process, what you can do then is test it to see if it breaks, and if you need to adapt it, you can do all this within 6 months or less, and then you can scale it. So this is a much more efficient way, and by involving the business and technology in the development and all the way through, and testing also with clients, so you make sure you include the test with clients, because you bring in the client experience. You can do things in parallel much faster and with considerably less risk, and you can deliver much more value to the business than ever before.
Great, thank you. Nigel, just coming back to some of the elements that were discussed in the report on automation. So people talking about suitability, onboarding, fact-finding, reporting as areas where they saw them as high priorities for automation. I just wonder, from your experience, either with the things that you've seen happen or the questions you've been asked from potential clients, what is the low-hanging fruit in terms of automation? Where can it be done, let's say, quickest and easiest?
Where's the quickest and easiest? Well, everyone talks about onboarding, and without a doubt, that needs to be right. Very simply for the survival of the company in this day and age. You've got to be meeting the time savings that clients are demanding and the digital channels that they want to interact. So that is a low-hanging fruit. Again, surrounded by a plethora of different firms offering niche solutions to enable that to happen. So that's an area certainly that people look at. In the report, middle and back office, there's an awful lot of discussion around how systems aren't integrated. They don't talk to each other. You have the issue of counterparties and interacting with them as well. Again, an area of low-hanging fruit. I mean, there are many instances where people, firms that have automated trade reconciliations, etc., have seen savings of thousands of hours very, very quickly, just by getting rid of false positives and that kind of thing. So, For every single business, it's different. For some areas, it is client reporting. For other areas, it's back office trade reconciliation. For others, it's onboarding. And then still others, with all the migration activity and mergers and acquisitions going on and this kind of thing, it's a lot of data migration, actually. We need to centralize this data and we need to do it quick because we need a coherent, joined up client experience. Now, data migration is you either employ a lot of people to do it, or you develop some very capable APIs, or again, a digital worker is able to do that. I mean, it's a sweet spot, if anything, for a digital worker. Just go into different systems, extract information, and put it somewhere else. Plus, carry out checks on it on the fly. I spoke to a client the other day. They're going through this process, but obviously, for treating customers fairly reasons, before they migrate them over, they've got to check that the client isn't going to be worse off in terms of the fees they're paying by making that transition. So what they're having to do is actually get that data out of the system, put it into a spreadsheet to calculate it, to make sure that they're not falling foul of any of these regulations before they can actually put them on. Now, that's kind of crazy. The computer is, I'm sure everyone would agree, is more than capable of doing that, and is probably less likely to make a mistake. And really, where those people are needed is, what are you going to do where you are falling foul of a regulation? How are you going to approach it? Nigel Armstrong's going to be worse off if he moves. So what are you going to do, and how are you going to approach him and make him happy?
In our various conversations, a lot of the research, and maybe it was the questions, but it looked at some of things you mentioned there, issues that they've got, micro issues, big issues, whatever, that they can solve, business efficiency, they can automate various tasks. One thing you've made clear to us, and Ian's touched upon it as well in his comments, is the sort of innovation, the new clients, the new projects, the new opportunities, the new segments that can be opened up through this area. So can you tell us, either from examples or from things that the firm has sort of strategized on, where can the efficient use of this technology and these processes really take wealth managers if they apply it properly? I mean, we talked about open banking, and there's cryptocurrency, and there's all sorts of new segments of clients.
Yeah, I mean, there was a statistic that came out the other day about cryptocurrencies. It's something like 49% of advisors have been asked about cryptocurrencies in the last 12 months, rather than the 7% the previous year. Like them or not, they're not going anywhere as yet. At the very least, you need to be providing valuations for them. That's what I would expect as an investor. Now, that's another manual process. But it doesn't have to be. All you need is their buy price, and to go off and get the current feed, and that can be automated and put straight into an app. For example, I think every company needs to have an app nowadays. I think they'd all agree with that, and that app needs to be real time and to be capable of two-way interaction. So that is a very simple area of innovation that needs to be provided for. Going forward, if who is it? Just Mortgages, they've launched the wealth management arm, so they're coming into the wealth management space. Wealth managers are going to have to follow suit as well, because I think client expectations are going to be, that's my biggest investment, and I need that to be seen as part of my portfolio. And actually, rather than dealing with a mortgage broker and yourself, I just want to deal with you, and to do that. And I think that's going to have to be a service that's brought in. And again, if you've got the bedrock of automation, it's actually extremely easy to do.
Yeah, okay, it's perfect. So the bedrock of automation built into the business. And Ian, I think this touches on your point, for instance, about day traders earlier, about different segments of clients and being able to respond to them. So they might want mortgages, they might want, a broader view of their financial wellness, other elements that wealth managers might be incapable of delivering now. So Are there sort of clear, quick wins in terms of new products and services and different things that you've seen happen or that you think can happen?
Well, yes. I mean, the UK is a little bit behind some of the other global markets. So what you've seen in the US is you've seen a rapid shift towards advice, and this by advice I mean holistic advice, goals-based approach, where you look at a client's assets and their liabilities, a bit like what you were referring to, and a bit like Nigel was referring to, which is you need to look at the both sides of the client's balance sheet, if you will. And the new tools available to wealth managers now include things like new advice processes that can be automated, next generation advice tools, goals-based type of stuff, and this is starting to take off now in the UK, because we've always had an advice gap, as you know, from the regulator, and for the first time, the technology and the process automation allows you to deliver what I would call the democratization of advice, which is the ability to serve the affluent, the mass affluent segment, and make money and make good money from it. Because you see, what you're also seeing is the early models. The margins can be well over 20%, whereas in the past you could never get there because your process technology automation wasn't there to enable that profitability to be achieved. So I think that's one example. And as Nigel mentioned, at the top end of the private banking wealth management, there's a shift towards new asset classes, but obviously the regulator will restrict the availability of those to the mass affluent. So you've got innovation in both sides of the client segments, the high net worth and also in the affluent. So there's significant opportunities here, which can be enabled by new technology, and you can see the start in the UK of this transition. And when you look at the recent results, what you can see is big differences in the rate of growth between individual wealth managers, big differences in the margin between individual wealth managers. And I think that's only going to continue, but it provides huge opportunities going forward.
Fantastic. Nigel, coming back a little bit to what Ian said earlier about the sort of the teams coming together internally to make these elements work for them. One of the fears from the research was, you don't want to get what was I'm going to forget the quote now, but basically you don't always need technology. Around technology you need other elements. You don't want a massive piece of technology when actually it can be solved with other problems, other individuals in the team. So when you're working with clients, in addition to the tech, what are the elements that they need to have internally or that you bring to them that make this work? Thinking about the education, the partnerships, bringing in consultants, whatever it might be.
Yeah, I think the big mistake that firms make is going back to the very start of this, is that they look at a process and they say, well, hold on, why would I, why in God's name would I put an intelligent process automation tool in to automate that? I'm not sure whether it's worth it. A sledgehammer to crack a nut. And what we sit down and work with them to do is to understand the entirety of their business, because that same tool, it can be used for onboarding, or it can be used beyond offboarding. It can be used for onboarding an employee, or it can be used for automating accounts payable. Now, this is about automating the business. Now that's where the big win is. Automate the business, and then you're able to add more and more services, far more easily. So it's just about getting them to, I think, to change the mindset to say, I need to automate the business. I need to automate. I mean, imagine if you could save costs across every department and across every function and across every process. That's when it starts to make sense.
And I think that's a new, I don't know whether it's a well-known way of thinking about it, is it? Because we think solution, process solution.
Yeah.
The process, there's a solution to fix the process, client onboarding, CRM, whatever it happens to be, whereas this actually is looking at it almost the other way around.
It is saying, look, you might have legacy systems in place that you're not happy with because they are slow and clunky. They're difficult to get information in and out of. So let's deal with that. Get a digital workforce to deal with that. You don't have to change the system. You don't have to rip it out and invest, hundreds of thousands in something new. Get the best out of what you've got, and use automation to drive the business forward, to scale the business. I think as mentioned to you the other day, the whole NHS COVID jab, rollout is run through Blue Prism digital workers. You can't stand up a workforce like that and train it in a matter of months, which is what had to happen. And they go into your medical records, they pull out your contact details, your mobile, they get in touch with you, they book the appointments. And all of that was stood up, incredibly quickly. But it's used across the NHS. All they did was point the same digital workforce at a COVID drive and build another process that was automated.
Yeah, fantastic, thank you. Well, gentlemen, we have a couple of minutes left, so I think time for summary points if we can. I think the research was fantastic, shows that there's a massive opportunity, but maybe the industry isn't yet fully leveraging what it can get from this. Nigel, what would you say in terms of next steps to think about, conclusions? Where is the industry and what more does it need to do now to make the best of automation?
I think there are service providers, there are software providers who you can bring in, get them to have a look at the business, understand where things could be better optimized, understand where the cost savings can be made. So let's tick that box first, because maybe it's not worthwhile. But let's find out up front before any investment is made. That is clearly the first step. And then lean on them to tell you whether or not this is possible or if it's worthwhile.
Ian, in this post-COVID world, what are your kind of conclusions on business efficiency, the need for automation, and what more wealth managers in the UK and maybe elsewhere can do with this tech?
Well, it's early in the post-COVID environment, but I think what is clear and what we're seeing from our clients is that they're seeing that the post-COVID model for wealth management is changing, and it's likely to change quite significantly. And that change, the pace of that change, is increased. One of the things that COVID has done has increased the speed of change. It's become more we would call compressive change. I think intelligent automation is a key part of this, and I think what you need to think about is intelligent automation is about probably combining three things for significant value increase, and those three things are: first, the process; secondly, the data, so that you get data insights; and last but not least, the people element. And if you can combine the process, the data, and the people in the right way and the right balance, what you can do is you can drive significant untapped or release significant untapped value opportunities within many of the existing wealth management businesses. And I think the other thing to say, as I said before, what we're seeing is that the UK is a little bit behind some of the other markets. We Accenture work across global markets, and the US is in the forefront of some of these changes. There are interesting markets in the Far East and so on and so forth, and the UK is perhaps a little bit behind, but we expect that the UK will catch up fast. as the industry starts to go through this, what we would loosely term this post-COVID transformation.
Fantastic. Well, growth is absolutely what the market wants, and it sounds that this is absolutely right up the street. So, Nigel and Ian, thank you again for your time and your insights. Much appreciated. For anyone listening in who wants to see the research, let us know. More than happy to send it on. It's publicly available, and that way I can share it. So, again, Nigel, Ian, and for those listening in, thank you very much. We will be in touch again with another WealthTech Talks in the near future. So, good afternoon, everyone, and thanks again.
Thanks,
Thank
everyone.
you.